About the US election, obviously something we talk about a lot, a big focus for the markets. But you say that it's not the number one driving factor for markets in Asia, particularly emerging Asia. Can you explain what the key factors there are?
Absolutely. We're clearly looking at a fair amount of short-term volatility, but the election, as you say, is not the be-all, end-all for emerging markets assets. EMs ultimately generally do well when the world is optimistic about global growth, and China plays a critical role in that growth, of course. So we're looking at three key driving factors for EMs in 2020 on beyond just this election. The first is global growth, and that's including and beyond the U.S., China, and Fed policy. And it's important for us to bear in mind that none of these are fully dependent on any one U.S. election outcome.
Yeah, how much of a factor as well is the notion that the coronavirus seems to be coming under control in Asia? Does that adjust the outlook for EM equities?
I think that the COVID trajectory is definitely key in terms of determining the level of uncertainty and the growth prospects. Part of the reason that we've been positive about North Asia up to this point is because that region has been first in and out of the virus and they've been most able to control it. The GDP print out of Korea last night for me, which was a fantastic surprise, and I'm happy to elaborate on, I think that that confirms how well a country can do when they control COVID.
At the same time, we do have the Korean won at a 19-month high. So given how export dependent they've been, especially with the huge boost that they provided for the third quarter GDP, how long can this last?
I think it can last a fair amount of time. I mean, ultimately, Korea, along with China, is a source of both that resiliency and the recovery. And just as you say, the recovery in the third quarter was led by a manufacturing rebound, which boosted exports. And that was led by computers and electronics, which we know to be a stay-at-home theme. So all of this really matters for us because we've been wanting and waiting to see more strength from the Korean economy and really show its resilience. And up until this point, the industrial production numbers at least have disappointed a bit and been shaky in the first half of the year. So it's fabulous to see this level of recovery.
And of course, we have seen the recovery being led by China, and that has shown in its currency as well. There's GTV chart on the Bloomberg showing the incredible strength that we have seen in the Chinese yuan. That is not the chart that we want, but you know what we're talking about. It's been an incredible journey for the Chinese yuan. And I do wonder, given that we had the PBOC's yuan fixing mechanism being tweaked, so basically telling banks that they have stopped using the so-called counter-cyclical factor in their estimates for the yuan fixing, what will that do to the yuan? Is this a symbolic or really a substantive move?
You know, I think we'd have to leave that to the PBOC, but I think generally the Chinese policy stance has absolutely been one of conveying strength, and this is, of course, in the face of U.S.-China tensions. One point of evidence for that strength, I think, is in this plenum that is happening as we speak. There's a fair amount of irony to see China going into a big medium-term strategic planning session while the U.S. is facing potentially unprecedented electoral volatility. And in this session, it's important for us to remember, in addition to, how China manages its currency, is that individual short-term U.S. policy pivots are not going to change China's game plan. The tensions between U.S. and China this year have really gone to the heart of China's strategic policy goals. That includes relying less on its export-led growth model and more on its domestic consumption.
Yeah, that China plenum you talk about will be wrapping up on Thursday. We hear a lot about the dual circulation strategy. I'm wondering what that means to you. Does it mean a more inward-looking China, or does it mean a more mature Chinese economy?
Yes. I mean, ultimately, China got to where it is today by following a very simple export-led growth model fueled by cheap labor and cheap credit. And that is not going to be able to continue in the future. So it's going to need to rely on its now much more rich and sophisticated domestic consumer base. It's interesting that their third quarter GDP figures showed that domestic services did play a more important role. So right now you have the short-term economic makeup matching those goals for the medium term. But ultimately, it's still a very long road ahead, and these sorts of shifts in the makeup of GDP come very slowly, so it's not going to be immediate.
Well, Cartica is a long-only fund. What's the best sectors to get long right now?
So we generally really like North Asia as a region to start. As I've said, that's the place for both resilience and recovery. The issue there is that the price action shows it. From a regional perspective, we've seen the EM Asia Index vastly outperform the EM Latin America and EMEA indexes really since COVID. You know, it's hard to imagine now, but Asia hasn't always been the huge outperformer it is today. This has very much been a 2020 story. And within there, the story is about Asia tech. For us, we really like the new economy, and for us, that includes e-commerce, communications, and fintech. So we're still excited about that space going into 2021.